This is Smart Investing with Mike Rand.
I just had an emergency meeting with legal, and we can no longer use the words hit, fun, or great show.
Securities and advisory service offered through KMS Financial Services.
This is Smart Investing with Michael J. Rand.
If you want to make it in the business world, you can't be so morally stubborn.
With Michael's producer, Chris Martin.
President of Pawnee Seniors United. He's like the Godfather, but old.
This show is live.
And call-ins are welcome.
Or you can email us your questions. Go to smartinvestingshow.com to see how.
For I have the pride, the privilege, nay, the pleasure of introducing to you the one, the only.
This is Smart Investing with Mike Rand.
Hello, everybody. How are you doing this Saturday? Yes, hello. You have tuned in to Smart Investing. This is the show about the topic of investing, where we try to take that topic, make it easier to understand, get you good, relevant information on each and every show, and we try to be entertaining. And in the entertaining category, that's where my producer, Mr. Chris Martin, comes in. Hello, Mr. Chris.
Hello.
I'm not late today. This is
I noticed that.
This is a lot easier.
You know what? It's a lot easier having fun on a Saturday like this than it is on a Saturday like last week.
That's right. We had the blizzard last week, and this time last year, I was riding bicycles fairly frequently, but not so much this year.
Not so much. Really? Because there's been less snow on the ground.
Yeah, right.
Than previous years? Are you kidding?
Yeah, but it had all gone away by about this time last year, and we, like you just mentioned, got the snowstorm last week.
All right.
Yeah, and that says two things. The weather's been bad, and I'm a wuss where I don't ride in the snow.
I didn't want to label people, but that was my first thought. So
thank you. So yeah, hello everybody. How's your Saturday going? It's about 40-something degrees out there for those of the people that are from Canada, or the people that love the metric system. That would be 6 degrees Celsius. I love saying stuff like that the way you look at me.
I had a van that showed me Fahrenheit and Celsius, and one time somebody switched it, and I looked over. It's 0 degrees? Are you kidding me? Stupid thing's broken.
Sure. So it actually is starting to feel a little bit like spring out there.
Next week I saw we're getting 50s.
Really?
Yeah.
Well, I'm happy. So can you run the rest of the show while I go tune up my bicycles?
Yeah, sure. So anyway, we left off on Phantom Menace.
Okay, everybody. So on today's show, let's get you the contact information as well, because there might be several things that you wish to talk about. There might be nothing that you wish to talk about. Not anything. Telephone number here to the studio is 509-241-5900. And that's how you get call into the studio. So 509-241-5900. We are on the web at smartinvestingshow.com. And we are also streaming live at newstalk590.com. And if you're listening, you're probably listening on Newstalk 590 or 1280 KPTQ. So on today's show, there's 4 things that I would like to talk about. Well, not that I would like to talk about. I mean, 4 things that
we're required to talk about in these 2 hours.
Yeah, 4 things that I think might help you get some understanding. I'm going to talk about the starting point with dividends on individual companies, the starting point. I'm going to talk about patience. I'm going to talk about market timing. And I'm also going to talk about not investing all your money. Because there is, even Warren Buffett last week when I was reading that editorial or his letter to the shareholders, he keeps a significant amount in cash for working capital. And working capital means in case you need it to get stuff done. And you as an investor, you as a family, you would like to, I think you should keep some cash, okay? Because what it does is that since I'm not a salesperson, I'm not trying to get every last dollar out of your pocket. That's point number 1.
I think that's where a lot of people don't understand.
Yeah.
I mean, we've gotten the callers that I think they think, oh, you want me to invest everything, and no.
Right. Point number 2, humans typically think all or nothing, and I don't want you to think that way, okay? A portfolio, one of the biggest parts of the portfolio that I like to think about, remember I tried to build a portfolio kind of like the great, it may sound kind of kind of high and mighty, maybe full of myself, but it's true. The great jazz musicians, the great artists, less is more. They figure out what they can leave out. When I'm building a portfolio, the first thing I think about is how much do I need not to mess with for the client? How much should they leave in cash? Okay? One big reason that you might want to leave it in cash, just to make yourself feel better. You don't realize the emotional swings that if you have all of your money invested and the stock market drops by a bit or by a lot, you immediately start to think, darn it, I wish I had some of that money back because I really would have liked to remodel the bathroom. Not a big deal. I really would have liked to upgrade my car. I really would have liked to take that trip, but it's usually people that are investing and have cash, it's usually some sort of capital improvement to their house. They usually don't wish to spend money on vacations like they should, and they usually don't wish to upgrade their car because it's going to depreciate to zero. But it's important. You might have a need in the back of your mind that becomes a need in the front of your mind if you all of a sudden think that you don't have the money to do it. So in simple terms, the reason that you should have some money in cash, I mean, it should be pretty obvious, and the reason that you should have your credit card debt paid off is it makes you a better investor. It calms you down. You have money in case something comes up, and that makes you a better investor. So it's our first line of emotional defense is what it is. It's not because I don't keep it there because I think the market's going to drop so we can buy stuff on the cheap. I keep it there so when the market drops, you don't freak out so much. And that should make absolute total sense, but a lot of people think here's what happens. Okay, if I'm going to leave it in cash, I'm going to put it in the bank. If I put it in the bank, I'm not going to get any money on it because these people are very frugal. They want their money to be productive. Well, if I put it in the bank, it's not going to be productive. Then if I put it in a CD, it's locked up a little bit and it's still not that productive. And wow, I'm very comfortable investing anyway, so why don't I just invest all of that money and then I'll just take it out of the investments if I need it? No, stop. No, you need to have some cash. You really, really do. That's the thought pattern that somebody goes through. Like, here's something. There might be a reason, too, out there. The one news item that can cause havoc in the stock market that is easily seen is Iran.
Okay.
If Israel messes with Iran, if we mess with Iran, if anybody messes with Iran, the price of oil is going to go up whether it deserves to or not. If there's a big shock in the Middle East, I would imagine that the market would go down, okay? You don't want to sell on that dip because you're going to get whipsawed. It's going to go up more quickly than you think, and you're going to be selling out at a low again, just like you did in 2008 or 2009.
Right. Life continues to go on.
Right.
So eventually all the kids in the parking lot are going to make up and go on again.
So here's my point. I'm talking about leaving some in cash, and I know there's going to be people listening to us out there that say, I know, I want to leave some in cash so when the market drops again, I can get it on the cheap. Well, I'm here to tell you, we don't know for sure if the market's going to drop again. But you have to be reasonable at that. You have to set a reasonable limit. Are you willing to buy if the market drops 5%? Are you willing to buy if the market drops 10%? And obviously, I still wouldn't want you to invade the cash that you would need for working capital, expenses that might come up, things that you may want to do. You only have this one life. I've never met anybody on a return trip, so it's reasonable.
He was downtown. He came into the store, and he had some stories.
So I guess I talked about one of the first topics straight away is that when you hear other investment shows, and probably when you hear me talk and you read the Wall Street Journal, anything like that, they rarely make the case for keeping cash for an emotional point of view, and that's my first issue. If you need the income, let's say that you are prior to retirement or in retirement and you know that you're going to need so much money for the next 12 months to live, well, let's not mess with it. Let's just take it out, put it in the bank, and you live on it right now. We're only missing a little bit of interest over that 12 months for that pile of money. And if you're going to try to make gobs and gobs of money on that income that you need for the year, you're being a little bit too greedy, frankly. You just need to be more mellow. take that money out now, so you have it to spend. Okay, you don't have to spend it all in one month, obviously. So, my biggest thing is I tell prospects or clients, any money that you need for the next 12 months, let's not invest. Let's just keep it in cash. It just seems like the most reasonable thing to do. Okay, I'm Mike Wren. This is the show Smart Investing. You're listening live on News Talk 590 KQNT and AM 1280 KPTQ. Why don't you give us a call here to the studio? The studio line is 509-241-5900. You can find us on the web at smartinvestingshow.com. And you spell my last name W-R-E-N. I'm from the firm of Wren Investment Management. We'll be right back.
This is Smart Investing with Michael J. Wren and Michael's co-host, Chris Martin.
I thought, that the economy sucks and that, nobody has a job. These guys are just spraying around expensive champagne everywhere.
I heard they have, a really rich dad.
Any opinions expressed herein are given in good faith and are subject to change without notice and are correct only on the stated date of issue. Past performance is not always indicative of future results. This material is not intended as an offer or solicitation for the purchase or sale of any security or other financial instrument. Security, financial instruments, or strategies mentioned may not be suitable for all investors. Prices, values, or income from any investment mentioned in this report may fall against the interest of the investor, and the investor may get back less than the amount invested. This material does not take into account your particular investment objectives, financial situation, or needs, and is not intended as a recommendation of particular securities, financial instruments, or strategies to you. Before acting on any recommendation on this material, you should consider whether it is suitable for your particular circumstances and